Hi, everybody, and happy Friday to all of you. It is Wes with Pikes Peak Trades, and excited to give you another week ending video for the week that ended trading. First full week of January, January 7th, 2022. And going to start here with the heat map of the FinViz futures and some interesting things that we're going to talk about. We're going to see, obviously, the top row are indices. Mega cap tech decisively down, small caps decisively down, commodities, metals up and steady. The US dollar, interesting. I want to talk a little bit about this. Are we actually seeing a topping pattern in the US dollar? And would that be an indicator that perhaps are we ready to start seeing some significant bottoms in some of the really beaten up stocks? So is this move right here from the end of November, is that an impulsive move down? Are we seeing just a bounce and continuation down? That could be a potential tailwind for the broad market. Let's also take a look here at bonds. Okay, so this is really interesting. Look at the level of the 30-year bond here. So it is at the levels of the COVID crash lows, the low and the retest here at the end of March. And if you're following along with growth stocks, which I know that you are because the growth darlings from 2020 have just been smashed in 2021. Some of them made significant tops here in the middle of the summer. I'm thinking specifically of Roku. And now look at the trend of bonds here. And then obviously yields would have been doing the inverse. Are we seeing a bottoming here in bonds? Which means, are we seeing potentially a topping in yields? We know many growth stocks are very, very sensitive to interest rates, having to carry over and roll over paper. Some of these have not yet become profitable, although they're generating big revenues. And so are these possibly two things that could stand in against the reflation trade? Now, I'm not the best macro guy, would never claim to be, but these are just some things that I'm wondering. We saw here when bonds did put in a bottom here in mid-October, we had a massive rally in QQQ. And maybe that's what we need to see again in order to fuel a massive rally in QQQ and ARKK. Okay, so just wanted to start with those kind of macro things to maybe set the stage for what we're looking at. Obviously, if the dollar does not move down and bonds continue to sell off, then we're looking at risk off, which we'll see on the charts correspond to some bearish counts that I want to show. Okay, now if you're only tuning in to the video to hear me say, why did I want the SPX to close down? It's actually because of what we're looking at right here on the NYMO. And it actually, unfortunately for what I was looking for, it did not trigger in the way I was hoping. I was hoping to see SPX down and NYMO up. And it is actually slightly down now that it has settled. That would have been a trigger for me to say that we could be looking for a very short-term move up. Now, on the bright side, we did see the VIX down. Okay, so we have SPX down and VIX down. Although this NYMO is positive, it's not quite the trigger that I was looking for. And we're going to be taking a look at charts. We saw the SPX pierce its 50-day. Okay, now, I want to also talk here about the NYAD. So we're looking at cumulative advancers, and the fact that this peak here, right at the start of the year, is significantly lower than the peak in early November. This is divergent evidence that does support a topping count. Okay, so you're going to see a balance of evidence. We do have to be very aware that we could have significant tops in place in SPX and QQQ, which just means that ARKK and IWM are just going to continue to get smashed. It's going to mean that financials and the Dow are going to start rolling over hard as they've actually been the leaders. In order for us to say that we can get momentum, we have to see broad-based buying through the indices. And right now we've got some concern that we could have tops in place. Okay, so let's now get into those charts. We've got some of the macro and some of the other technicals I follow here discussed. Let's look at the weekly SPX, and you're going to notice a weekly bearish engulfing candle. Okay, now, since the COVID bottom, to my eye, there have been 1, 2, 3, 4, 5, 6 previous bearish engulfing candles. Now, did all of them resolve negatively the next week? And the answer is no. In the week that closed the end of November 2020, that bearish engulfing candle resolved upwards, as it did almost exactly a year ago, as it also did in the middle of the summer here in June. Okay, now, so the evidence is split. Now, of course, there are the ones that did resolve in a very negative way. So we've got to look at the topping period of August, September 2020. We have to note in July of 2021, a spike down low that then resolved itself bullishly on the month. I'll talk about what kind of count that might be. And then, of course, we had the Thanksgiving week candle that then resolved into lows in early December. Okay, so my take on this is the data is mixed. We can't just say that the bearish engulfing candle on the S&P 500 is going to make everything else fall down as well, but it certainly needs to catch our attention. And I mentioned the topping count. So I haven't talked much about the top is in count, but given what I just showed in NYAD, there is a primary topping count potentially in place. We see the RSI divergence, and that is a condition that is typically necessary for the major top to take place. And if we find that 2022 just brings a lot of pain, then I would be looking for price to meet the rising 200-week SMA in the upper 3,000s. From about 35, there is diagonal support at about 3,800. Okay, so obviously painful. Now you're going to see other versions. In fairness to the uncertainty out there, I think this is only fair for me to give, is the possibility of an expanded flat where price would need to retrace, which would likely coincide to some significant earnings disappointments here, especially probably in mega cap tech for this index, for price to meet the 50-week SMA, and that would occur in the low 4,000s. Okay, now the bullish count. I do want to talk about what could have been some pretty exciting bullish setups of a nested nature, but as I'm going to show you with a lot of names, those have essentially been demolished over really the last month. So there is the possibility that we have a bullish 1-2 in place on SPX. And if I get you into the daily there, you're going to see that we possibly entered into a fib pullback area with price just barely closing above the 50 SMA. So there is the possibility that we do get this popping move in this coming week of January that's going to send it strongly up here in my bullish white count. Now, if that bearish weekly candle does resolve negatively downwards, then I think we could just see the S&P approach some of these other wave 2 fibs and maybe even need to catch here another channel catch, which would then just correspond to weakness that you're going to see in some other counts, especially in the Dow, I think in an XLF. Okay, so want to keep that in mind, that the bullish case is not dead, that there is the possibility. Okay, now, from a very short-term perspective, This is the kind of setup that hit over and over and over and over in 2020 and for the most part in 2021. So we have an inverse head and shoulder setup. This is a nested Elliott wave 1212, and here's your neckline. And so I want to present the possibility that we do get something very exciting, where the selling that occurred at the end of the day Friday was a bear trap, and we're ready to see price explode up and out above 4,700 and then strongly into the 4,700s, which would then trigger the rest of that nested move. Okay, so want to offer, as I like to do, a balance of evidence. Now, if bears are in charge, and we're seeing here on the daily either version of the bearish count play out, then that setup is going to get demolished. Okay, and then we're back to square one, which we've been back to square one at so many junctures, really since Thanksgiving, especially in the growth stocks that I like to track. Okay, now let's keep moving through, and let's work in through the Qs. Okay, now on the weekly Qs, it is another ugly candle, down over 4.5%, and on the close here, just below 380. It did lose the 21 EMA. That gets your attention. Is the probability of a double bottom here with the December 20 low, how probable is it? Well, you've immediately got to get bullish resolution to start the week. And if the candle resolves in a negative way, then very, very likely this potential 1-2 count gets demolished. The first alternate would be that 4 just slides over. But like SPX, we've got to keep in mind that we have a couple versions of bearish counts. Okay, so it's really a tenuous spot here. This is not a high probability place. I think most of you have realized that trying to catch bottoms has been a fool's errand. That's a way to just cut your account up. We're really waiting for a more decisive set of resolution here to take place. But just like the S&P on the Qs, we do have that potential bullish setup. Okay, so we're looking at a potential 1-2. Now, even if we don't get that, and I had mentioned this on some tweets later in the afternoon, Friday, the possibility that we do at least get an oversold bounce. So we've got QQQ with 2 consecutive touches of its lower Bollinger Band. And is that going to be a springboard for it at least to put in a retest of its downsloping MAs? I've got that there as part of this bearish blue path. Okay, now the setup in the Qs for the much more bullish scenario is actually even more nested in a bullish way than the S&P. And again, these are the setups that have been demolished, but it's there. And I just want to present it as the possibility if we get surprising bullish resolution. The count is suggesting a bigger 1-2 with a 1-2-1-2 nest. And that's what would allow price to get propelled back healthily up, moving up into earnings season. Okay, now, since we're talking here about tech, I do want to show one of the big boys. Want to talk about Apple. And Apple with not a good weekly candle. This is an outside bearish engulfing candle. So again, we have to take care here. This is not the place to be putting a lot of money on the line, especially over the weekend. And I wanted to show this picture here in Apple, even bringing it to the monthly, to just give you an indication of just how far this name has gone. Unbelievable to think that in the depths of the financial crisis in 2009, you could have bought Apple here. This is all split adjusted, but at $3. So a $10,000 investment here would have turned into about $500,000 today. Just an incredible run. At some point, Apple will have a cycle degree correction. And I do have that as the corresponding count in case we get the very bearish resolution in the S&P, and that would be what I have of a super cycle degree that would be correcting all price since 2009. Okay, now dialing it back a little bit, if that candle just resolves according to the blue count, I think some bottoming areas for Apple would be right around 160. So something to meet up with its rising 21-week EMA. And of course, to keep it balanced, there is also the possibility of something much more bullish to resolve. And that possibility is going to be shown just like the Qs in S&P as a 1-2. Okay, so I don't have a great edge. You know, I wish I could offer you a great edge. We're going to see what the market wants. My gut instinct is that we're not going to sell off hard into earnings. That my thought here is at least the institutional players, some bigger money, wants to see what these names have to offer here into earnings, and then possibly some disappointment. I think it's unlikely that we see a lot of these names keep up with some of their 2021 earnings reports. But again, right now, that's all just conjecture. I'm just trying to lay out here the possible paths and really give you the way that you can react instead of try to predict. So the reactive way to look here at price is to see what does Apple do with the low that it made today. Can it hold it? Can it get back above these resistance lines? Can it move upwards enthusiastically in that potential wave 3 count that would correspond with those inverse head and shoulders on the S&P and on QQQ? So we just need to see. We need to see how Sunday futures play out. We need to see how we open. I'm certainly not going to be surprised either way. Ready and prepared for the counts. Okay, so wanted to show you those three and then just take you through some of the daily setups in some of the other big tech names. So let me get back here to our daily setups, and let's take a look at Amazon. So the daily setup here for Amazon is a kind of an ugly daily candle, a lot like what you're seeing. And on Amazon, it's an attempt to try to hold this low from October 4th, to try to hold 3176 to keep the potential of a bullish count in line. And on Amazon today, we barely set and kept above Thursday's low. Okay, so there's really no traction here at all in Amazon. And the short-term path on Amazon today was wild. So I had tweeted this out. I've since deleted the geometry of this bull flag that broke out. It tested, it hit this declining resistance, really double resistance, and then immediately sold off. So active bears playing this geometry could have had an incredible short, and that could have taken you $50 in really a matter of a couple hours. And then really after that, just a bunch of chop. So this is not, to me, a really powerful setup. I think there are others out there from an individual perspective that I would rather play. And one of those is definitely Facebook. And Facebook has been one that has been cooperating a little bit better. I caught this fake break of this down channel, the recovery and the test and the move back up for some really nice money on Thursday, and then anticipating we need to set that higher low wave too. And did we do it again at the close? Okay, so this was one of the very few things that I did decide to swing into the weekend was Facebook, based on this potential nest that I thought matched the index that it's within. And if you were unwilling to take that risk into the weekend, it's really a simple decision. Is we've got to see price move up and out of this circle here. It's the 336 up to the 338 area, a back test and a move up. And then just look at how much price is still left for you if this count is correct. I think one of the hardest things for any trader, whether you're experienced or whether you're relatively new, is the patience to wait for that setup to confirm. So don't try to catch the bottom. Now, I'm maybe speaking out of both sides out of my mouth here. I did take a slight risk of doing it, but I was willing to put a small amount of money on that setup. But the more classic case is let it play, and then knowing how much more money you've got here on the line. Okay, it was an amount of money I'm willing to risk, given a name that I've pretty confidently tracked throughout this week. Okay, the other one I really wanted to show here was Tesla. So let's get into the daily on Tesla. And what we're looking at, a theme that you're going to see, we've got here a bearish engulfing daily candle, but into a possible wave 2 fib box on Tesla. And now the short-term setup here for Tesla, also interesting. Also something I'll be watching very closely as we get into Monday is, do we also have a 1-2 nest here? So if the low that was set the afternoon at 10:10, if that can hold and we can see price move up and out, I think this could be a trade for you to take here on Monday morning. Now, just like I suggested with the Qs, I think also account, this is a 5-wave down count that does have me a little concerned. So anytime I'm looking at a zigzag and I'm seeing the extension of the C leg more than 1.62 of the A leg, which it is, it's actually almost 2.0, that's when I'm actually thinking, you know what, this could be 1, 2, 3, 4, 5, and the bounce might only be corrective. Okay, so just some things to look at from a probability and potentially the ability for this to sustain itself is that any bounce could be just sold again if in fact we're in that bearish blue. Okay, so a lot of things that we've got to wait to see resolved, but I really like the setups here in Facebook and Tesla if the general markets will cooperate here on Monday. Okay, want to keep going here. Now, how might we know here that we could have more of a risk-on situation moving into the start of the week? Well, what if we look here at crypto? So I had posted out for you the possibility of a bounce play in Bitcoin. And I did enter here on the touch of this lower channel, looking for that bounce play up. Now, I'm keeping this as part of an overall bearish count. And that's really just kind of a gut instinct here, looking down at the daily RSI and noticing that it's as oversold as it was all the way back in May, but that impulsive bottoming action didn't happen until we set divergence, and it's not there. And we're actually going to see that on some other growth names that I show. So if we're kind of believing here that Bitcoin could be an indicator of a more risk-on situation, I'm not entirely sure it's ready to fully run. Okay, so I'm playing it as a bounce, but I'm anticipating that we need a divergent low to get set at some point later this year. So if we see crypto move up enthusiastically into Sunday evening, then maybe that does play over into futures and possibly could lead to at least a bounce at the start of the week. Okay, now let's look elsewhere. So let's look at the probability here of an imminent major top. If that's to take place, we're not seeing imminent bearish price action in financials. And I've said it a number of times, and I think it's true historically that you really can't get super bearish the market until you see a bearish reaction in financials. So if we're looking at a large degree sell-off, you know, we don't even see a red candle here, unlike we did on a divergent high back in the COVID crash days for those who are really, really bearish. This is the opposite of a bearish candle. Look at that bulls in control candle up to a new all-time high. Now, is there divergence? Yes, of course, but divergence, it only matters until it actually confirms itself. So I don't see as much probability of an imminent topping danger here because we do see some strength in banks, and we'll actually still see some strength here in industrials. So I'm still looking for movement up into the middle part of this year in financials. And I'm not sure exactly where those targets are going to be. I've got this target based on the relationship here between an intermediate 5 wave and this first wave. But as I said, I'm not seeing imminent topping action in financials. So I'm going to give a little bit more leeway here to the bulls. Now, I had circled this area in a tweet earlier this week about how XLF does sometimes like to run up right along its upper BB, and we're seeing that right now. So I'm wondering if we're just going to get another big stretch up, and then could that lead to an early top in financials? It's possible, but I don't look at what we had in financials this week as signs of an imminent top, i.e. We're going to immediately crash starting next week. Okay, now a little bit more concern here on DIA. So just like the S&P, just like Qs and Apple, I don't like that topping candle. It's got the look of a shooting star, although with a little bit more on the wick down here, maybe not a perfect or ideal shooting star, but I just want to keep in mind it's possible that that does resolve down. The count that it would do that, okay, would not be super bearish. Maybe we also need to see DIA get down and retouch its 50-day SMA, just like we did today with the S&P. So if that happens, the bullish count is not in danger. It's really tracing out a nice potential bullish channel. If it holds, I could definitely see industrials move strongly up certainly into the end of the first quarter of this year. Okay, now, how about small caps? News is not so good. So an outside bearish engulfing weekly candle. Okay, now, are these always bearish? Not imminently. Take a look at the outside weekly bearish engulfing candle in the middle of June. The S&P had one in the same time period that also did not resolve bearishly. And the next week here, it was up over 4.5%. So you can't just say one weekly candle is going to be the thing. It's really the confluence and the full body of evidence that you put together. Now, do bulls want to see that? No. But it's also possible that this is still within a 1-2 count. So, interestingly enough, IWM did not make a lower low today, although it did engulf on the candle body. There is the possibility here on IWM that we've kept a 1-2-1-2 count in play. Now, because the margin of error is so tight, it certainly is possible that we need to extend this 2 over. And that would kind of go along with those weak candles in the S&P, in DIA. So if we do see that early weakness, then we're certainly not going to be surprised based on it. But I'm still leaving in the possibility that we see a big small cap rally. Okay, so just like the other indices, we do have that topping count here, and it's in an ABC pattern, and we just need to see more price and time in order for us to be able to say that we can project this with much more confidence. Okay, now let's get into some growth stuff. So let's look at ARKK. And there's not much technical evidence that we've reached the cycle bottom. Down almost 11% on the week. We've got elevated bearish volume, which is interesting that we talk sometimes about capitulation volume, but what is also true is that bear markets require increasing amounts of volume to sustain. So while it's possible we could be seeing capitulation level volume in a lot of the names in ARKK, it's also possible that this is really just some hardcore distribution that's going to continue lower. Now, it did reach a potential pivot area. Do we know for sure that this is where buyers have their orders stacked up? Well, we won't know until we see some follow through. But I would point out that the area that this bottomed, similar to the September candle, is an area that then reacted very, very bullishly with price. So we're kind of looking here at the level of confluence of, could we see interest rates reverse? Could we see bonds stop their selling? Could that relieve some pressure here on growth? All of that kind of coupled together with this pattern is what we really need to see in order for these names that most of us really love to trade to play out. We do have that daily divergence, unlike what I showed on Bitcoin, and it is actually a month's worth of divergence. So while not there on the weekly, there on the daily, could it at least give us a bounce? Could it be actually the start of a more significant bottom? And back to that weekly, I did want to point out to you here that weekly RSI is more oversold than it was in the COVID lows. Now, since price is obviously higher, we call that hidden divergence. It's not as powerful as the classic regular divergence, but it is still something for us to keep in mind. Couple that with a month's worth of RSI and MACD divergence on the daily, and we've got the possibility that we could see a surprising bullish move up. Okay, now, some individual names, and not many here, really just a couple. And I want to take a look at Square. So Square here, also in the same count that I have it as Shop, the same count that I have it as ARKK. Have we seen a bottoming here? And again, we've got oversold conditions of the like here on Square that have actually never been seen. So is that enough? Well, what's oversold can just get more oversold. Maybe we need to see the actual 200-week hit here at about 125. That would correspond with the 0.618 bottom. But also, just like on ARKK, we have a month's worth of positive RSI divergence. So the possibility there in place. And I want to be ready in case this plays out. And I wanted to show you the other short-term setup on here, the hourly chart. These are the kinds of plays that need to resolve upwards if we're going to have any confidence that we can get a lot more buying back into this market. These are exactly the kind of higher low plays that have just been demolished in names like Square over the last month. So interesting. It's like Facebook and Tesla. It's within those top three of on watch for me. Can we see it move up decisively out of some of these resistance and get a bullish pattern that we can then later throughout this year even look to swing with even more confidence? Okay, I'll end here quickly, and we'll end here with Shop. I had shared the weekly chart on Shop, and I wanted to show this in line with what I talked about volume. Are we finally starting to see some selling volume dry up? So as volume was elevated into these nasty candles, are we starting to see that selling volume dry up? And could this be here the beginnings of a significant bottom? We've got an RSI that hasn't been this oversold since downtrends in 2018 and 2019. On the very, very short term, we've got to start seeing some higher lows set in. We've got that short-term divergence. It's done everything it needs to do from a technical perspective here to finish this C leg. Okay, so this is another name that I'm watching. No position here on shop, just watching, but it kind of shows you really where we're at is that we certainly could have continuation of selling downwards. There's evidence to suggest that that could still be in place. We also have some evidence to suggest we could be ready for at least a big bounce. So as always, hope you found that balanced and fair. Hopefully you found some actionable takeaways. I don't want this to just be theoretical and academic. I want it to be practical. And let's see what we get. I think we're certainly in for more volatility. And I'll be very interested to see how crypto does, looking at what I showed you on Bitcoin over the weekend and where we end up on Sunday. But just make sure you have a plan. Make sure that you follow your plan when conditions are not ideal. Cash is a great position, and just make sure that you're protecting your account. What's most important is that you can live to trade another day, that we're not seeing the levels of blowups that totally put you completely out of commission. So again, thanks for the likes and follows, and hope you found it interesting and informative. And as always, wish you a wonderful weekend and excited to see what we get in the second week of January 2022.